Right guys, morning everyone. We are starting today our live session that is gonna be lasting for 3 hours, still from Panama guys. We are Monday, the market is about to open in 10 minutes. So as usual, I'm gonna start with an analysis on AMC GME. I wanna talk today about HYMC that is seeing some volume coming here after AMC and Sprott decided to buy some shares in this company that is a gold and silver mining company. I think I'm gonna buy some shares today at the open, so we have 9 minutes left on HYMC. So let's start right now. I'm gonna start with AMC daily time frame. So here, I'm gonna come back to that because in 9 minutes I don't have time to make the full complete analysis. We're gonna see where are our support levels, where are the resistance levels, what are the scenarios that can happen. So for now, the situation is, bam, let's go on a logarithmic scale. The situation is that we're in a move down and that we have the signal right now with a volume increase, a nice breakout, that this correction is over. So we can expect a move up to develop in 5 waves as usual. So in this new move up, hopefully that can go very high. We are at the very beginning. So this is what we call a first wave. So it's not easy to say if this first wave is complete or not. We reached 22. We can go, I think, maybe to 25, even maybe 30 in this first wave without any pullback. And then at some point, we're going to have a pullback that can happen maybe in 1 or 2 weeks. And this is going to be a very nice opportunity to load some shares and options, especially as the volatility will be lower. So right now, the first resistance level is at 22. It's the recent high we had last week. The next one is at 25. So let's see if we are able to go back to these levels today. We are still bullish here, of course. As you can see, the volume is increasing on the way up. We only have green candles. Every day was a win last week, guys. So we are looking good, and there is no immediate signal of pulling back. Now let me go quickly on an hourly time frame, and here we can see that we have some. The market is taking a little pause, which is once again good and healthy. And we can see the volume slightly lower, the momentum decreasing a little bit, but the market is not making new highs. So we don't have any bearish divergence, okay? We don't want to see the market making new highs with a lower volume, lower momentum. So right now on the short term, I would say that the level to take is 21. If we are able to trade above 21, I think we can push to 25. We have support on the 50-day moving average. On the hourly time frame, it's the best I have for now at 19.7. Then next support is at 18.7. So roughly between 18.5 and 19.5, we have some support. We have resistance around 20, 21, then 22. So this whole area is an area of resistance right now. If we're able to push through that with volume, 25 is the target on the short term. Then once again, we expect maybe a little pullback. Hey guys, morning everyone. We expect a little pullback. That can happen maybe in a week or 2. So once again, I'm going to be there, guys, with you to monitor that. We don't want to see strong volume in this pullback. If it happens, maybe we're just going to squeeze and push higher without consolidating, without correcting. It's possible as well. It is just unlikely. And then once again, this pullback, which can be seen as a second wave correction, that is here, guys. Okay. For now, I'm starting to check the scenarios. I'm using, ELLIOTT theory once again to help me kind of try to understand this, the potential structure that can take this move up. And for now, what I see is that we didn't pull back at all since the lows. So at some point, we're gonna take a little break, a little pause once again, which is healthy, just like we're doing in this move up. As you can see, we have some small pauses that happened, and I expect the same thing to happen on a bigger time frame. And once again, this would be a nice opportunity to reload. So I'm gonna get back to that. I want to check quickly with you guys what is happening on HYMC. So here's the chart, and the chart is telling us that for now we see the volume kicking in. We know what happened here. There was at the market offering that has been done on Friday. Even it has started even before, but AMC added some shares on Friday, and this is the reason why we are about to open higher today. I see the pre-market at 170, so around 30% higher. So here what is, I think, interesting to have a look at is okay, when I check the option market, it starts to be animated. It is not crazy yet. We have a total short interest right now at 10%. Once again, it has started much higher. So this is HYMC that I'm checking, and as you can see, as the 15th on the 15th of March, we had around 60 million outstanding shares. Okay, the equity float was 35 million shares, and so the short interest was 32%. And this is the number that is interesting. Then we had some shares that were emitted. AMC bought some of them. So the short interest is right now at 7%, but once again, because there are more shares. And I wonder if the total number of short shares has increased as well or not. So I'm going to have a look at that when the data is going to be available. For now, it is not. But what I can see is that this 7% is probably undervalued. I think it is more than that, because once again, the number of shares has grown, but we don't have the update yet on the total number of short shares that maybe has grown as well during the last 2 weeks. The data I'm having for the short interest is the last available data as 15th of March. So we're going to monitor that, but we have some short interest. We are a bit in a situation like AMC was back in the time. So this is the reason why AMC as a company decided to get some shares here. They're just betting on the fact, it has of course nothing to do with their business. They're betting on the fact that there's going to be some interest growing in the stock after they announced that they're getting in massively. They bought 22%, a share of 22% of this company. And so right now, you know, they're just betting that gold is going to go higher, silver is going to go higher, and that this company that is that was close to be bankrupt will do better, because they're probably going to change a bit the business model as well. You know, they're giving them, they injecting some cash. And they're counting on you guys. They're counting on the social media to, you know, talk about the stock, to talk about the situation. So I think that something might happen here. I'm gonna buy some shares at the open, guys, because I don't think a big downside, and we have definitely a big upside. Okay, I don't know how high we can go. As you can see, we are still in a downtrend here. So technically I don't have any signal. I would have the signal around 250, something like that. So for now we're still in this downtrend, but we definitely have a nice consolidation that happened after the first move up that occurred when AMC announced they're gonna get involved in HYMC 2 weeks ago. So this consolidation is a very nice support area, and it is around 120, 140. So I don't think we can go really lower than that for now. So buying shares at 168, let's see what price I can get, is, I think, very limited in terms of risk. I'm not going to go very heavy. I think I'm going to go for 300 shares to start, and then I'm going to increase on the way up if I have a breakout. And if we go lower, I can increase my position as well. So I'm going to do that in 1 minute. Okay, AMC is about to open higher, GME as well. I'm going to, of course, GME about flattish. I'm going to analyze that. I'm going to show you as well the spread that we have between AMC and GME. GME is still trading at the premium of around 20%, guys. Okay, so I'm going to try to grab some HYMC shares. Okay. Hey Scott, what's up, bro? Yes, feeling bullish. For now, we don't have any bearish signs. Okay, so I'm grabbing 300 shares. Bam. 170. Okay, I'm done. So I just bought some HYMC 300 shares. Okay, guys, so let's have a look at GME. And then there are many things I want to discuss with you guys. We have a lot of information on the market. I'm gonna of course talk about the global market, guys. I'm gonna talk about the volatility. We have some nice move up on Bitcoin as well. We're gonna discuss that. First, once again, up. Sorry. Okay. So first, let's have a look at GME. So why is it coming here? Up. Okay. So GME up 2% right now. So we are still in the same situation. Okay. So we have this massive triangle. Look at that, guys. Okay. Massive triangle. We are coming on the major resistance, which is at 160. So let's see if we're able to take it. We have the 200 moving average, 200-day moving average that is coming at 165, guys. So this is the major resistance area. So for now, as you can see, this move is very strong. It didn't take any breath for now. So I think that we still have the bullish momentum with us, clearly. Let's go on a shorter time frame to have a better look at what the price action dynamics can give us here. So still the same thing, we're looking for information about volume, about momentum, and about volatility. We're going to combine all of that and try to know who is in control. So here, of course, bulls are in control, but what we are interested in is to know if a pullback is about to happen or not. If yes, at what levels, where are our support, where are our resistance levels. So like I said, the major resistance is 160, around here. For the support, we can see that we have, so we can use just the previous lows and consolidation. So I think that 147 is a nice support that can be used. But once again, this move has been quite extended already. So I think that the best thing to do here, of course, is to wait a little bit to see what the price action can give us in terms of pullback levels later. Because once again, I think that this is only a first wave. So just like for AMC, so we can, I'm back here in the daily time frame. Okay, this is a first wave. As you can see, this is one move. It has not taken any pause for now. And even if we have a look at what happened in the past, like here, you can see that here we have the same kind of move, like up 60%. We had like one very bullish week, then the market took a little pause, squeezed higher, pulled back here. So even if very strong moves up, like here as well, bam, we go to from 40 to 180, then we get back here and move higher again. So in any move up, we always have this kind of ups and downs, even if they happen very quickly. So here for now, we keep pushing higher. So let's try to find how high this first move up can go. So to know that, we have a different tools that we can use. So let's start to make once again some Elliott wave counting. So we had 1, 2. So I think the third wave is complete. We're doing something like that, guys. Okay, this is the situation we are having. So this is the reason why I think that right now it's better to wait for more information. If we push higher for the fifth wave, that's very good news. It means that the second wave pullback will just happen higher. But to me, the structure of what I'm seeing here is suggesting that this first move up, we are, I think, in the last wave of this first move up, which can still, of course, go much higher, last maybe a few more days. But at some point, we're going to have a pullback that would take place. And I think that this would be the best opportunity to, once again, get options as the volatility will be lower and buy more shares as well. So here we can measure 1 plus 3 and apply to the bottom of the fourth because we have a nice structure. And this is telling us that the usual ratios of the fifth wave are 61.8%, which is at 172. So this level would make sense. It is not very far from where we are in terms of percentage. We are discussing about 10%, 9, okay? So I think that GME can push 10% higher, maybe today, maybe tomorrow. For now, we are still looking good, but GME is giving us some first weakness in the price action. The weakness I'm seeing is that we are making new highs on lower volume, lower momentum. So like I said, this is creating some bearish divergences. So we can of course push higher in a bearish divergence, but it is just telling us that this is in line with what we see in terms of counting the waves, which is that we are maybe coming at the end of this first impulse. That was a beautiful impulse, full of volume, full of volatility, and that is just suggesting that at some point we're gonna take a little pause and probably pull back a little bit. So let's make some scenario. Let's try to see at what levels we could put back. Let's imagine we go to 170, which is I think a very reasonable target. So in this situation, we can measure the potential first move, and the second waves are usually going to the 38.2% retracement. Sometimes if they are very shallow, only 23.6%. So we will probably see again 135 or 150. So for this very reason, I mean at 187 is above that level, so I think that it's better to wait. We're gonna see some better opportunities to get in some shares. Right now, on the very short term, we can use again moving averages to find some support areas, but here on the hourly time frame, as you can see, we don't have anything that is very clear, that is really telling us this is the moving average that most traders are using. So we need to once again wait to see more clearly where are all the buyers located. Here we can see we have this one, bam bam bam. So on the 30 minutes time frame, the 50 period moving average is still supporting the price very well. So here we might see a bullish reaction. So it is right now at 143, so we are for now very far from that. So let's focus more on the resistance areas. I think that right now we're developing in this kind of triangle. Okay, it's even a wedge pattern, it's not a triangle. So the difference between a triangle and a wedge is that a triangle is a corrective pattern, whereas a wedge is pushing in the direction of the trend. So here we are bullish, and a wedge is going higher. We have a rising wedge that is once again usually a pattern that we find at the end of some strong moves, which is usually containing a lower volume, just like we're having right now, and a lower momentum as well as a lower volatility. So whenever I see this pattern, I prefer to wait to know if we're gonna break out above the wedge upper band, which is here at around 160 again, or below. If we break out below, it means that the second wave pullback is starting. If we break out above, it means that we are squeezing and that we can start to see some very, very strong moves happening, because right now the bears are all located between 160 and 170. So let's see if we're able to go through these levels today. Bam, bam, bam. So I hope this is helping you guys. I'm here trying to give you the different scenarios that can happen, that I see potentially happening, that happened before in the past. So once again, we are still in this first impulse that is clearly showing that bulls took back control on the short term for sure, medium term, and soon long term. For bulls to take back control in the long term, we need to have a clear breakout above this 160 level, and we are coming right at it today. Okay, so look at that, guys. I like what is happening. We are moving above this triangle upper band. That is not very clear, once again, because we don't have that many reactions. So I think that this triangle upper band is here, can be adjusted. But what we have very clearly is a resistance at 160 and the 200-day moving average at 165. On top of that, we have the FIB projections that gave us 172. If I apply the usual ratio, I measure 1 plus 3, I apply to the bottom of the fourth. Once again, guys, fibs are just here to give us areas. They are not levels that are very precise. They give us areas so that we can look for some real resistance levels or support levels in these areas. Here, the area is 170. So what I'm getting from that is that everything between 160 and 170 is an area where probably we have some bears located, maybe some profit taking that's gonna happen. So if we're able to go through that, it means that we need a lot of volume, and it would be a very strong signal sent once again to the market. So let's see if we're able to do that today. We're gonna monitor. What is very important is to see the volume that is gonna be trading today. We are Monday, it's the beginning of the week, so let's see what everybody wants to do. The big money players are here, guys, for sure. They're involved in this trade. Whenever you see a big volume like that, it is not only retail investors. It means that everybody is starting to look at GME because they see the potential, and this is a good scenario for this strong moves up to happen. Once again, without the big money players, it is very hard to move a stock like that is a big market cap, I think around 20 billion US dollars. So yeah, we need everyone to be in this trade, and we have everyone. So let's see what decision. Usually those guys, they take some decision over the weekend, so let's see if they're still buying today or not. If they are not buying, we can still push higher, but on low volume. So this is interesting to see, and I think that they're probably gonna, you know, do the same kind of reasoning as I do, which is that for now we are of course very bullish, pushing higher, but at some point there would be some the market will take a breath, and then this would be a very good opportunity to reload. Once again, the higher we go, the better it is, because the clearer it will be that bulls took back control on the long term. And then we're just going to adjust the FIB ratios that we are using to find the potential pullback area that could happen once again in a week or two, so we have time. And so we're gonna adjust the FIB ratios that we apply to this first move to see where we can potentially buy more next week or even before. It depends on when this happens. Okay, so 160, we are there, guys. Indeed, it's a very important level. So let's see if we're able to once again go through it. AMC is strong. So let's go quickly have a look at the spread between AMC and GME. You guys know that this is something I like to monitor. So the spread is here. I don't know if you see well, guys. I'm just going to compute it. Bam. So we were at 20%, 21% last week. Once again, this spread was mostly due to the fact that, okay, so for now I don't have the data. So AMC is trading at 22, GME 160, Okay, 17%, so it's still a very nice premium, a very yeah, quite substantial premium that GME is trading above AMC. So AMC has can catch up, and we can see AMC is catching up today very nicely. So here, let's see what we have, guys. Okay, bam, bam, bam. Okay, so we are breaking out above this, you know, kind of correction that we had here. So I'm on the hourly time frame, so I don't see the volume yet. I'm gonna go on the 15 minutes time frame because the 15 minutes is complete, and as we can see, we have a nice volume. So this is, it's not complete yet. We have 2 more minutes, guys, on the 15 minutes time frame, and we're gonna have a complete volume bar that is gonna be formed, and this is a very good comparison that we can make with what happened last week. So we can see that the number of shares trading on AMC in the first 15 minutes of this week are already bigger than what we had on Friday, bigger than what we had on Thursday, Tuesday, and last Monday as well. So only Wednesday was trading more. We got, for now, we are testing the 22 level, but this is looking good, guys. This is looking good. I think we're gonna push to 25 today. So I like what is happening here. Okay, I'm gonna try to find. Okay, this is a nice pattern that is forming. We just miss a clear consolidation that can help us to find where the supports are. Okay, as you can see here, we have a breakout, but this trend line has 1, 2, 3, 4 reactions, but no reactions in the very recent past. So I'm not sure the support is 20. The support is at 21 or a little bit below. We are going through the 22 levels, guys, right now. So this is very good. Okay, HYMC is pushing higher as well. So here, once again, I'm going to come back to AMC and GME very soon. But what I'm monitoring on HYMC, which is a gold and silver miner. So we're gonna have a look at gold very soon. I'm gonna show you what can happen there, and of course this is very much related to the reason why AMC decided to get some shares of HYMC. They are playing you know, this big moves up that we can see on the commodity market, and that is gonna probably last for some time. So so I think that we are in a situation where we just entered the bull market on the commodity prices. I mean on the commodity market for the coming 1, 2, maybe 5 years. So this is the reason why everything that is related to these commodities, so it can be oil, it can be gold, it can be silver, is, I think, you know, there is a lot of interest in the stocks because they have a lot of potential. So we're gonna discuss that very soon. I'm gonna show you the chart of these commodity prices, and I want to as well explain why everything is gonna be more expensive, I think, in the coming years, and what impact it can have on the economy. Okay. So bam, bam, bam. GME going through the 160 level, guys. Very interesting. Let's have a look at the volume. Okay, so same thing. Nice volume. So it's very good to see that. Nice volume. As you can see, it's the biggest 15 minutes volume we had, a part of the one we had on Wednesday. So it's a nice impulse. It's giving you very strong signal to the market. Okay, so what we would like to see here is a move really beyond this wedge upper band that is right now acting as resistance. As you can see, we found some, you know, resistance just here, guys, at 164, so close to the 200-day moving average, close to this 160 level, close to this wedge upper band. So we can see this is where things are happening here. So once again, if we want to go beyond this level, we really need a lot of volume, but for now the volume is here on the 15 minutes time frame. So let's see if we have more room to push higher here. Okay, bam, bam, bam. Alright, guys, so ask me questions if you know, if you want, and I have prepared a lot of things I want to go with you through today, so we can discuss. Let's quickly have a look at Bitcoin, because I think that Bitcoin, then I'm going to talk about the global market. Once again, I'm going to come back to this situation that we have on HYMC. So this is related to the commodity market. So first, Bitcoin, guys, I think you were with me when we had this breakout above 43,000 last week. So it happened on Thursday. It was a breakout above this trend line. So once again, let me quickly recap the situation on Bitcoin. So it's quite interesting to see what we are having right now. We were moving down for the past 3 months. Okay, we had a sharp move down, then we moved sideways for 1 or 2 months, and we were creating this nice triangle pattern that is that can be used to know if the market is about to shift on the upside or on the downside whenever we have a breakout. For the breakout to be good quality, it needs to happen with volume, and here it reminds me a little bit the situation we had here. Look at that, guys. Okay, so for now it is actually hard to say if this breakout is gonna hold or not. And as you can see, back in the time here in June 21, so it was 1 year ago, roughly, a little bit less than that, we had the same kind of pattern. We had a strong move down, then we had a triangle pattern and a breakout above the upper band of this triangle, as you can see here. Okay, and we had a strong move. It was a move of 10% higher. Then it was followed by another move of 4% higher. So we had Bitcoin that was holding, that hold basically 3-4 days above this triangle upper band. And as you can see, it has moved through this level without volume. Here we had a little volume increase, okay? But it was not a big volume, which means that everybody was not in this trade, and then it got sold out. Okay, so this is one situation that happened in June 21. Then, as you can see, we had a little bit again the same situation. Here I can draw another triangle. Okay, and this one so happened 1 month after that, and it started exactly the same way as right now. We had this breakout above this triangle upper band that started first without volume, okay, and we grounded higher without volume, moving roughly by 2-3% a day, but without strong volume. And then suddenly the volume appeared. Where did it appear? It appeared close to the recent highs, which means that bears were there, and that this is when a lot of Bitcoin needed to be exchanged for bears to be defeated. And whenever we had this signal, then we had a pullback that you can see here that happened between 39 and 37, so around 6% lower, and then we moved strongly higher. So this was the signal that bulls took back control on the medium term, even long term. So here in this, we are a little bit in the same situation. So for now, of course, it looks bullish, but we didn't test the major levels yet. As you can see, this breakout first above 43,000, which was the first signal that we are moving higher, occurred with very low volume. Okay, so for now it's not giving us really the information of did the bears let it go and will everybody get in Bitcoin or not yet? And for now, the answer is no. For now, people are waiting. There is not a lot of volume that is trading. Once again, Bitcoin is trading on different exchanges, so we need to check that on all of them. But I've done that, and there is no exchange where I saw a big volume increase happening during this breakout. So this is telling me that we still need to wait for more information. Bam. To really know if we're able to go to make new highs, you know, to go back to the 70,000 area, you know, close to the recent highs. So for now, once again, the volume is weak, even after we went through 46,000, which was the first resistance area. So we could expect that we need some volume to go through this level. But once again, we went through this level, as you can see, on low volume. It was here, the volume trading yesterday, when we went through the 46,000 level, was even lower than the one that we traded when we went through 43,000. So this is telling me once again that for now we don't have the big information. I need to see a very strong volume trading, and then it will confirm, of course not with 100% probability, but with a high probability that bulls took back control. And whenever we see that, then same thing as usual, we can use a lot of different tools. For example, fib ratios, we can use moving averages, a lot of different indicators to find where are the support levels and where the second wave pullback could happen. Okay, so for now we don't have this information, so we can very well just get rejected brutally and make new lows. This is still possible. For now it's not looking like that at all, but it is still possible. We have some major resistance that is to me around 48,000. okay, so look, AMC ripping above the 22 level. So we have here some nice situation that is happening. We can see that this is the major resistance right now. It's a little bit the equivalent level of 160, 165 on GME. So both stocks are for now finding some resistance at these levels. Once again, we're going to monitor if we're able to see a very strong volume happening here. So on the 15 minutes time frame, once again, this was already good information to see that the first 15 minutes of the day were trading on higher volume than every day last week, except one, which was Wednesday, where we moved really strongly higher. Okay, so still for now, look at that, we are coming at the wedge upper band again. Okay, it's looking like AMC wants to go to 25. So this would be what I'm talking about. There is a lot of room. We have a lot of room above. Look at that. We're breaking out above 22. So GME is following. Of course, those two are moving together, but AMC is today making the nicer moves for now. Okay, so let's go back quickly to the cryptocurrency market. So, like I said, we are looking very nice, but we missed for now the volume. We went through some resistances like 46 and 43 without volume, so this is not where the big money players were, the whales on the crypto market. 48,000 is the next resistance level, so I think that 48,500 even, let's be precise. So I think that to go through this level, we would need at some point to involve some volume. And if we see this volume coming, then the pullbacks that will happen probably later will be very good to buy. So we're gonna monitor that and see if this scenario can happen. Let's go quickly on Ethereum. So it's a little bit the same situation. So as you can see, you can draw the same kind of patterns because those two assets are of course very correlated. And here I see a little bit the same thing, okay, which is that we are moving higher, we are taking back some important levels, but to me the real resistance levels have not been taken yet. Okay, so on Ethereum it's around 3,400, okay. The 200-day moving average is at 3,500. So this is where we can see the real resistance levels that that can, I think, need a lot of volume to be taken back. So let's see what's going to happen here. For now we are bullish, but we are waiting for the confirmation of this. Are you hearing my Discord? Okay, sorry guys. Bam. Indeed, okay, I was on mute. Bam, let me handle that. Oh, it's this one. Okay, I know because I have one here. All right. Okay, should be better. Sorry about that, guys. Thanks for letting me know. Okay, so what do we have? So still GME for now, finding some resistance at this 200-day moving average. As you can see, this is where we went. So we are testing this area. Once again, to go through these levels, we need a lot of volume. So if we are able to do that, guys, we would be in a very nice situation. So we're gonna monitor that. Once again, AMC is moving today a little bit more than GME. And here Okay, it's quite interesting what is happening. Let's analyze a little bit the situation on shorter term. Okay. Okay, it looks very much to me like we are doing a fifth wave here of this first move up. Okay. This is once again high volume, very impulsive. So usually whenever we have this kind of strong moves that go through some important resistance levels, here we are at 22 and we had this this downward sloping trend line, and we went through that with volume. This is looking to me like the beginning of something, and it looks like the beginning of this fifth wave that can once again go, I think, to 25. So let's see if we're able to do that today. This would be once again a massive move up. It's gonna be interesting. Let's have a look, guys, at what information we get from the option market. Okay, so I was checking HYMC. We're gonna get back to that very soon. Let's check AMC. And yeah, okay, Nasdaq, I'm gonna show you guys what is happening there. But once again, we have some, I think, good information that can be used for AMC and GME that is coming from the global market, that is coming once again from the VIX that I'm keeping an eye on. Bitcoin is going as well together with that. We are basically right now bullish on everything, guys. We're bullish on AMC, on meme stocks, on the global market, and on the crypto market. But as I said, you know, every move to be healthy needs at some point to take some rest, some pause. So I think that we still have maybe 1, 2, or maybe even 3 days ahead of us that are going to be you know, controlled by bulls, but then at some point we're gonna need to pull back a little bit. So I'm gonna show you the different scenarios. Bam, bam, bam. So AMC, what is happening here? Let me refresh that. Okay, that's growing. Okay, so we had the expiry of the 25th of March. So we lost some options that were very out of the money options and that were creating a maximum synthetic short of 15%. No, it's not that bad actually. So you see everything has been rolled roughly because all the options we lost on the 25th of March expiry are back already. So this is very good information. The DTC is at 2.9, okay, because, okay, there is, so you can see shorts have added to the position. We were at 19.7 of regular short interest rate. We are right now at 20.3. So this is the data, once again, coming from 15th of March. So basically this is rather stable, I would say. And the synthetic short is increasing because retail is buying call options, maybe not only retail, by the way, but we have a lot of options that I bought rather close to the money for now. But this is looking good, and the DTC is at 2.9. So once again, we are coming to the areas where big things happened in the past. Okay, as you can see in November when we almost squeezed, we had a DTC at 3.5. So we are just below these levels. So it's going to start to be very complicated for shorts to hold this short position if we keep moving higher. So we are coming to the scenario where, you know, we can just squeeze. So as you can see right now, we keep pushing higher. So this is very good. Okay, let me have a look at triple Q. Bam, bam, bam. So this is a little bit the situation that we are in. And once again, this is, I think, related to what's going to happen on, you know, the rest of the market. So, I mean, crypto market and meme stocks. I think this is, you know, all related, of course. So here we were in a correction, okay? And the question we're having is this behind us? Can we be bullish again, you know, on the medium term, at least for the coming month, maybe even years on the global market? And my answer is that on the short term, like I said, we are looking good. We have some good signals because we took back the 350 level. That was, for me, the major level to take back for this correction to be complete. At least this was the first signal, but this is not enough. The major resistance area is to me at 370, so slightly above, just like for Bitcoin, just like for a lot of stocks. And my scenario, my preferred scenario from here is that we keep, you know, grounding higher. And because I don't see any reason we don't really go test this level. So we have here once again the 200-day moving average that is coming at 368. We have this 370 level that is created by the recent highs, by some recent lows. We had a lot of volume that was trading there. So this is to me the major level to take back for bulls to be really in control. I don't think we're gonna see that happening right away. I think that right now we entered, you know, a consolidation area where we're gonna have lower volume, lower volatility. The market is, I think, gonna stabilize a little bit in this range, so 370, 350, because those are our closest resistance levels and support levels. So right now, I think the market is looking for a direction, and usually when the market is looking for a direction, you know, it starts to oscillate, to be rangy. So this is what we can expect to happen, I think, on triple Q. SPY is going to be the same thing. So at 370, I think that we're going to have a rejection. So when could this happen? I think around the 5th of April. Once again, this is very visual, but it's, you know, giving good information. So around 370, we're probably going to have a first rejection, and then, you know, we're going to stay in this range. And depending on what the market is giving us, depending on the news, you guys know that we are in a situation that is a bit difficult to handle for the Fed regarding the inflation, regarding the rates that they need, you know, to increase, to tackle inflation, but in the same time they need to manage to keep a good environment for the economy, to keep developing, for the labor market to stay strong, for the growth to be here, even in a situation where we have a war, where business is not easy to make across the world, you know, because of all the supply chain issues that we can have, because of this as well, commodity market prices that are just going higher. So we're in a difficult situation, and for now we don't have all the answers about that. So as long as we don't have all the answers, I think it's going to be hard for investors to really be bullish on the long term. Once again, on the short term, we are bullish. There is no doubt about that. But I think that we need to see more in terms of price action and in terms of news to really turn bullish on the long term. For now, I have two scenarios. In both of them, we are just, you know, staying in this range for 1 or 2 months. Okay, so I think that the market is just going to be quiet, the global market. Look at that, guys. Bam, bam, bam. So AMC up 15%. Okay, so we are going to 25. It's pretty obvious right now. Okay, GME going through these levels, guys. So right now we can just, you know, observe, because there is no more resistance. So it's gonna be, it can become very wild. Okay, we went through this wedge upper band, as you can see. So right now it can even act as support. We can maybe find some, you know, support at 160 that has just been taken with volume. So to me, this is a clear breakout. So let's see what can happen here. We can see that the spread between AMC and GME is tightening. We were trading at 21% premium this morning. We are now at 18%, and we're even more than that. Okay, we're at 14%. Very interesting situation. Okay, so my view on the global market once again is that we're going to keep developing sideways for the coming maybe month, with not a lot of volume. The moves are going to be smaller, so we are waiting for the VIX as well to give us the signal that, you know, things are really calm, and that, you know, bulls can start to think about building long-term positions, which for now I don't think is happening yet. I think we have buyers, but I don't think it's like really trades that are done on the long term. It's more like short-term trading for now. And if the VIX is coming back below 20, once again, which is the level below which we can consider that the fear is gone of the market. For now, there is still fear. VIX at 21.4 is not, you know, it's not a VIX that is telling us that we are in a easy environment where things are just going to go one way. Here, just telling us that moving sideways with sometimes some strong moves is a very likely scenario. So once again, my view on triple Q SPY, it's going to be a little bit the same thing, is that we keep grounding higher. So SPY, the level is 460, and then at some point we find some, you know, we consolidate, we move sideways. The VIX is going to probably be close to the 20 area at that time. And then there's going to be the question that we all, I mean, we're going to have the answer of the question we all have, which is, are we going to be able to go through this 370 level on triple Q and 460 roughly on SPY with volume? Okay, it's going to be important, because right now we can expect the volume that keeps decreasing, okay, because we're in a situation where, you know, investors trade less, a lot of investors are in a wait and see mode. So we can expect the volume that keeps grinding lower with this market that is, you know, stabilizing, consolidating here. And then either we go through 370 with a volume increase, or through 350. Okay, so on the downside. And this information, that for now we don't have it, so we can of course try to guess, but I mean, it's not very relevant. It's better to wait for the price action to give us information. Either it's below 350 and then it's not looking good, it means we had some bad news. It means that inflation probably is, you know, just moving higher, and it's hard to control, that the growth is getting impacted by the war, and that the Fed cannot do anything anymore to tackle that, because they need to keep the rates at high levels to control inflation. This is the narrative they have. So they are stuck in that. So we just need to hope that these higher rates will not impact the growth too much, as well as the war. So this is the question we're having. For now, it is very hard to answer. The best answer we have is the answer that is coming from the market, that is once again here telling us we are bullish on the short term, but we are waiting for some long-term signals. Okay, guys? Okay, so I have some question. Is AMC running more because of the difference in premium example that you were talking about? It's hard to answer, but once again, I think that a lot of investors have seen that AMC is late. The reason why AMC is late is, like we have seen, the massive number of options that we had on 25th of March expiry on GME. This expiry is behind us. So right now, I don't see any more reason for this premium to stay here. Once again, this big gamma that we had on the 25th of March expiry created a lot of short position, short exposure on the option market maker side. Now, they probably still had some short today because the expiry is on Friday. They probably still running a little bit after the price to try to, you know, to buy those shares that they are short. But right now, I think it's gonna just regularize. So AMC will probably catch up this week on this spread. We, in the past, have checked. Sometimes the spread is staying for, you know, a couple of weeks, 2-3 weeks. For now, it's been 1 week. So we can still have GME trading at a premium with, so right now 17-18% compared to AMC. But at some point, it's gonna come back to the normal levels. But once again, it's only gonna come back to normal levels when things are gonna a little bit stabilize. So for now, we are still in this strong impulse, strong first move up that started, you know, 2 weeks ago. So it can stabilize a little bit during this move up, but most likely we would need to wait for the market to take a pause for this second wave pullback that once again is going to be, I think, the very, very nice opportunity to, you know, build up some long position using options, because right now options are still crazy expensive, and depending on where we are pulling back, but most likely a call option that, waiting 2 weeks plus the volatility going lower is gonna impact any option price that is around the 30, 40, 50 levels, 50 strikes by 50%, okay? So it has a huge impact. Time and volatility has a huge impact on options. So this is the reason why the best timing to buy those options is whenever you see a strong move up that is clearly, you know, the beginning of something like we're having right now, and to wait for the strong move up to be finished. So it can last, once again, 1 more day, 1 more week, I don't know. I think that 25 needs to be touched on AMC for this first impulse to be maybe complete. Maybe we need to go higher. It's once again here very hard to say. We can only, you know, try to guess, but we need really to wait for this high to be, you know, hit, and then we're gonna see once again lower volume, lower volatility, lower momentum, and this is gonna be our second wave that we are waiting for to build up some position. So GME, you know, still looking good, staying at this 160, 165 level. This is looking great. HYMC once again as well. We're gonna keep an eye on this one, guys, because I mean the focus is on AMC GME, of course, but this is a very small market cap, and if AMC is doing well, I think it's gonna impact as well HYMC. So the resistance level that I see is around 250. So for now we are below that, so we can, you know, I mean, it's a real gamble to know what's gonna happen here, but I want to show you something, guys. I want to show you something. So we're gonna have a look right now at the oil market. The oil market is, I think, today dropping a little bit. Bam, bam, bam. Okay. And you're gonna see, I'm gonna show you something about the oil, then I'm gonna show something about gold that is related to oil, and then I'm gonna show you why I think HYMC can, you know, break this resistance and do some nice moves. And we're gonna discuss quickly targets. Even if it's early, it's still good to have, you know, a rough idea of what we can expect. GME 280 end of week. Yes, why not? Why not? 280 seems a bit far from now, but given once again the strong volume, the strong you know, bullish momentum that is creating here, it's possible. But first we need to go through this major resistance area with volume to defeat the bears that are sitting here. And then the next real resistance level, we can start to talk about that, to me is 250. Okay, so if we're able to go through that, I mean, here we would need to make a massive move up. We really need a lot of volume to go through these levels. I'm not sure we can make it without taking a pause, but as we can see in the past, sometimes, you know, those moves are very, very wide and very strong. So it is of course possible. Another information we can get. That's interesting, because once again, when you measure 1+3, so once again, Elliott waves on the short term worked very well on AMC and GME in the past. So this is the reason why I'm still using this methods here, especially when it starts to move exponentially. And like I said, whenever we measure 1+3, so here I have my first four waves, then we can apply fib ratios to 1+3 to try to guess where the fifth wave might go. And I told you that the 61.8% is the most, you know, likely level whenever the third wave is extended. But the 1.618 is the one that we usually see if we have a fifth wave extension. So in the very bullish case, we could have a first wave that goes to 250. So it could happen this week. So it's hard to say what can trigger that, but I would say that if we move through this resistance area today, that is once again around 160, 170, if we go through this resistance area with volume, so volume is here for now, then we could very well be in this scenario that is giving us a target around the 250 level. So you can see the 1.618 level is at 247, and the recent high that we have in this triangle is at 250. So we have a double level here. So I know it's looking very far from now, but we can still, you know, just try to imagine what could happen. So it's a 50% move up. It's not that much, guys, for a stock like a GME. 50% is not crazy. We can look in the past, you know, it was moves of 100%, 20%. Okay, so the first squeeze is, I think, a little bit different because no one was prepared for that. What we are having right now is a situation that is more, for me, under control by both sides. Everybody knows what can happen. The options are well priced. The volatility is very, very high, so that option market makers have protection, so that they can, you know, take their time to react. They are not gonna find themselves, you know, trapped like they were, I think, back in time in June, in May, and in Jan. Let's see. I doubt that we can do that without a pause, to be honest. But once again, if we are able to go through these levels and close around the 170 level today, this becomes a scenario that can very well happen. So let's see if we're able to do that. It's going to be interesting to follow. So once again, Nasdaq not moving much. Okay, AMC still looking very good. I think we're going to 25. I was discussing, guys, about the oil. Okay, woohoo, dropping heavily today. All right, so we got rejected at 115 level. Okay, we still have support around, I would say 90, 97, 95. The 9500 area is an area of support, so maybe we're going there. So we're gonna need to see, but whatever happens, this is what I wanted to show you guys. We are here talking long term, all right? On the global market, like I said, I think we have, you know, a boring month that is coming ahead of us. I think that not much is gonna happen, and that in a month or maybe even 2 months, we're gonna have a direction that is gonna be taken either above 370 on QQQ or 460 on SPY, or below 440 on SPY and 350 on QQQ. Okay. But something that has already happened and that has already taken a direction and that is going to be for a long term is the oil. Okay, and of course the oil is the commodities of commodities. I mean the raw material of the raw materials, which means that we need oil to produce anything, even to produce steel, even to mine, you know, gold. I mean everything that everything requires this first energy to work. So whenever we see that this breakout that here occurred, you know, very clearly with volume increase, with the consolidation before for some fundamental reasons above 97, 95, we can expect that this move up is just the beginning of something that can last. Once again, we were talking here about a 10-year move. So we are breaking out above a resistance that was created by a 10-year correction. Even if it was a sideways correction, it was still a correction. So I think that the oil market is entering, you know, a new era. So this is a little bit scary because we might see things that we've never seen before. It's going to have a huge impact once again on the other commodities, so that's why I'm going to talk about oil, and ultimately I'm going to come back to HYMC, and I think this is the reason why Adam Aaron decided to take some shares into the stock. So yeah, this is a long-term move. We have 95, 97, 92, you know, this is the support area. I think we're going to stay above that. I'm not sure what's going to happen in the coming month. Maybe we're going to, you know, just oscillate here. But what I think is that at some point we're gonna have, you know, a strong move up, and we're gonna revisit the recent highs, and who knows, maybe even go beyond that. So what impact can this have first on the rest of the commodities and then on the market? So let's try to answer this question. So if we have a look, you know, at all, I mean, I was discussing a lot of energy stocks with you guys, and they all have a little bit this kind of shape. Okay, so I can show you, I don't know, BTU for example. Okay, so here we're talking, it's 2018, so it's maybe not the best example, but you know, BTU is an energy stock, and it broke out above 20 in Feb, retested this area, and now is moving higher. So I think, you know, we're gonna keep moving higher, and you know, I have a lot of stocks like this one, and this is just showing me that the whole energy market is seeing on many stocks some clean breakouts above some resistances that were created by long-term trends, long-term usually down trends. So this is once again confirming to me that we entered a new era on the energy. We kind of felt that, but technical analysis is here kind of confirming this feeling with some facts that are breakouts, volume, and yeah, pretty much that. So what impact can this have on the gold market? The gold market has a different shape, as you can see. All right, so I'm here on the weekly time frame. So all right, so it's forming a kind of huge cup and handle. Okay, I'm here on a weekly time frame having a look at gold. All right, guys, so gold is today losing 1%. Okay, so first I want to just use the fundamental reason that I just gave you on the energy prices, so oil, a lot of stocks, gas, and once again remind you that this is going to impact the rest of the commodities. So we have a fundamental reason to think that that everything is just going to go higher. So right now we can do some technical analysis and try to guess what could happen on this market. So gold, sorry, is seeing, has seen a very strong move up happening since 2018. Okay, and then the March here, this was the COVID crisis, so we're at the bottom of this fourth wave. Then we have a massive rally, and things just were more calm. And since Feb 22, so last month, we have a breakout above this trend line that was very nice. We bought here, by the way, for those who are with us in Discord, we posted an alert about that. And we had this breakout that is to me the beginning of a fifth wave, all right? And this fifth wave is probably going to go through this, trend line that is here. And if it happens, we would have a valid cup and handle pattern, okay, that is here, quite obvious. So for now, we don't have this breakout, but my take is that we're going to break out once again because of what I'm seeing on the oil market, which is to me done. I mean, I don't see any, unless we have some really fundamental reasons that change, I don't see how the oil market rally can stop. So I know this is going to impact the rest of the commodities, and this is the reason why here I don't have the breakout, but I kind of feel it's going to happen. And if it happens, as usual, breakout, retest, and then we're going to push higher. So we can expect, gold to be trading around 2,500, maybe by the end, maybe next year, in a year and a half. Okay, this is going to be to me maybe then the end of this strong move up. So then we're going to see what's going to happen. But this is giving us, okay, a move up on the gold market of 20-30%. Okay, this is what we can expect. Silver, as you guys know, is moving together with gold, and especially we have discussed that before already, so I'm not going to show you everything again, but we've seen that silver is trading, gold is trading with a premium compared to silver. So silver is going to follow that move and even probably amplify that. Just exactly like AMC is doing today compared to GME. I told you guys that AMC was a little bit late, and we can see it's catching up today. AMC up 15%, GME 6%. So we have 9% catch up. So it's pretty strong. Bam, bam, bam. Okay. So we can expect the same thing to happen between gold and silver. Once again, the spread is going to tighten at some point. It's going to probably take some time. But all of that to say, guys, that we are bullish on the energy. So we are bullish on the rest of the commodity market. We can see we have some short-term signals on gold and silver. We don't have the long-term signals yet, but my take is that it's going to happen maybe in a month or two. Let's see. So let's go back to what we were discussing at the beginning of this video, HYMC. So both Gabriel and I have bought some shares. So I did it at the open with you guys. Gabriel did it as well. So the reason why, once again, is that there is this interest into the stock, which is creating this bullish momentum, but there are some fundamental reasons, like I've just shown you, to believe that in the long term, everything that is related to, gold, silver, mining, commodity, is gonna do good. All right, so I'm not sure about how this company is managed. Probably not very good, because they would not be dropping that heavily otherwise. But if there is new money coming, if there are some good decisions that are taken, if the gold and silver prices enter a rally that is gonna last, like we've seen, probably 1 or 2 years, maybe even more, we're gonna see, it's gonna be much easier for these companies to make money, right? So for now, we don't have a breakout above 250, but once again, my take is that this breakout is very possible, that it can happen. If it happens, what can we expect? Okay, guys, so let's have a look at that. Hey, Paula. Hey, bro. Thanks. Okay, I'm gonna answer the questions soon. What is the next big resistance? It's 25 on AMC. Why do I have 25? I'm gonna get back to that. I think I need to go on a shorter term, because right now I'm having 25, but it's not that obvious. I think I used fibs and I used previous highs and lows. Let me just conclude on the targets that we can have on HYMC, because once again we have some volume coming. We have some breakouts that might arrive soon. We are trading above the 200-day moving average for the first time. I mean, for the second time, okay, let's be precise, since September 20. So this is already some good information about a reversal that might be coming. So if we're able to make this breakout, then as usual, we usually find some resistance around the recent highs, and then, you know, we go from one to the other. So the first one would be at 330 and the next one at 570. So of course we can go higher, but then we would need to have a lot of you know, positive news about the company. But 330, 570 are levels that might be reached. Let's quickly have a look at the option market on HYMC. Okay, we're gonna monitor that, because once again, if we see that things are getting hot, this is gonna be good information. All right, why is my price delayed? Okay, so it's trading at 180. Bam. So we have some short interest. Like I said, we checked that at the beginning of the video. There are a lot of shares that are getting emitted, so it's not easy to you know, find I mean to use the short interest data like it is, because we are using different data that are not updated on the same day. But what is important is that we have some short interest, and then we have some options that are getting bought. So let's see which strikes are getting bought here. And we have options until the 8th strike. So for now, those options are concentrated around the 3 levels. So it's showing us investors are bullish, but for now, this is not going to create too much trouble for option market makers. So we're going to monitor that, and we're going to see if the other strikes are growing or not. If they are growing, once again, this is going to tell us, give us information about how likely we are to make very strong moves. Okay, so for now we are looking good here as well. AMC is still going higher. So let me quickly have a look at your questions, guys. So AMC running because of the difference. Okay, GME 280. So let's see. I think that 250 is possible. 280 seems very, I mean, high, of course, but I don't see any real resistance around 280. But 250, why not? Once again, for the 250 scenario to gain weight, we would need to cross the major resistance area, which we are testing today, right now, around 160, 165, with volume. So let's monitor that. Let's see if we're able to do that. So won't AMC be stopped by the 100-day moving average? Bam, bam, bam. The 100-day moving average, I'm not paying much attention to this one. It's not a moving average that I personally use, but whenever you switch time frame, it's pretty much comes back to the same thing as changing moving averages. So 100-day moving average, but on which time frame, bro? This is what. Sorry, I lost the questions once again. Give me a sec. Once again, guys, I lost my window. Let me reopen it. Okay, I'm back. So 100-day moving average, but which time frame? Because I guess on the daily time frame. So let me add it quickly. I'm gonna change the 50 to the 100, and let's see if it has acted well as, you know, support or resistance in the past. And if yes, then it can be used, of course. All right. So I'm seeing it's on the daily time frame. So look, I mean, you can try to, you know, have a look at it by yourself, brother. Okay, so who asked me that? Loic. I don't know. I don't see this 100-day moving average really well respected in the past. Look, the last time it was crossing the price action was in November. And okay, yes, we had some reactions. Okay, fair enough. We had two support reactions. Here resistance. So yeah, it has acted indeed a little bit, and even here maybe but it's never touched perfectly. Here it has not been touched perfectly. Here it has not been touched perfectly. Here as well. So I'm not saying this is not a resistance. I'm just saying that in the past, this is not where traders were located. I mean, this is not where traders were taking profits, and this is not where traders were buying. So maybe things gonna change, but most likely this is not a strong resistance. Okay, so this level is at 24.5. So let's zoom in a little bit, because once again I showed you that my resistance is at 25.5. Pam pam pam. I would rather put it at 26 when I look at it. Once again, the way I what I'm doing to find the resistance levels, I'm checking at the previous highs, previous lows, and some levels where we had a lot of volume. So as you can see, here we have a big volume bar when we went through this 26 level. Why 26? How I know it happened at 26 and not 25 or 27? It's because I had some recent highs here at 26 and some recent lows here at 26. So if I put myself back in time and I'm seeing here a huge volume, as you can see, it's the biggest 4 hours volume we had, going through from 23 to 29. I know that this volume was created by bears that were at 26 and that got defeated, because at that time this was the clear resistance level created once again by the very recent highs and very recent lows, and we had 5 reactions, so it's good enough. Then we can see if this level acted as resistance or support in the future. So here we go through it. Is the volume increasing when we go through it or not? A little bit, not amazingly, but we still had some bulls here. And then here, as you can see, it acted clearly as resistance. on very low volume, by the way, but the price action got rejected at 26 and then we moved lower. So for now, this is the immediate resistance level that I can see. And the other method that we can use now that we have 1 plus 3 is to measure 1 plus 3 and to apply it to the bottom of the fourth wave. Okay, so this is not giving me very precise levels here. Okay, so once again I'm checking at the 61.8%, the 1-to-1 and the 1-to-1.618. So it's giving me 24, 23.8, 27 and 33. So fibs are giving me 3 different levels, and then I'm using trend lines to find the real resistances. And for me, the resistance area is around 26. So maybe we're gonna push a little bit higher. It's not easy to say. We don't have enough price action here trading in the very recent past to really give us precise levels. So what I'm giving you guys here is not very precise, but it is, I think, good enough. To me, the first resistance level is at 26. Okay. Okay, so ding ding dong dong. Not very happy, no offense. Okay. So you're asking a good question. I said that I don't see the price action really making a squeeze before. So I was talking about April, May, June. Okay. Once again, I can remind you why I was saying that, and let's see if things have changed or not. Okay. So if I take AMC chart, we're gonna do that on both of them. I was saying at the time we're trading around 14, 20. And I was saying that I see the price action keeping moving sideways until we meet this major resistance line that is created by this triangle upper band that is right now around 32, but that in April, June will be, moving lower. So I was saying that as long as I don't see a breakout above this level, I don't think we can really squeeze. For now, as you can see, we have a first impulse. So it's good, okay? It's very good news. But if we look at what is happening on the rest of the market, we have some strong resistance happening here at 370. This is true for Bitcoin, this is true for Triple Q. And we are still in an environment where even if the bullish sentiment is clearly coming back in the past 2 weeks, on the medium term, long term, we are not fully bullish yet, and we need some fundamental reasons to for this to happen. And once again, as long as we are not very bullish on the global market, asset managers, big money players, they're going to be cautious with where they put their money. They're not going to because they're not making big profits on their long positions, so they're just not going to put money in risky assets heavily right away. They will do that progressively, little by little. But so yeah, this is my global view. So for now we're looking good, but we don't have the signals that things are really that all the problems are behind us. Then can we squeeze in this environment? I mean, a squeeze is an event that is by definition almost unpredictable, but what we can say is that for now, if this is happening, so I don't know, let's assume the first scenario I was discussing this morning. So AMC moves to 25. Okay, when I look at it closer, it's rather 26. Okay, the level to watch. We can of course go to 32 right away. It's possible as well. But whatever happens, I think that at some point we will need to consolidate. We're gonna have a second wave pullback. So in the very bullish case, AMC goes to 32 right away. In this case, we can try to see where the second wave pullback could be. Okay, and it could be around 25. So even in this case, in the very bullish case, we might see the 25 level again, maybe here, so mid-April, so in 2 weeks, something like that. And then we might take 1 more week to go through this 32 level. So in this very bullish case. I think that end of April, maybe beginning of May, we would have this third wave, okay? Third wave move up. Once again, third waves are the ones that you know, involve the biggest volume, involve the biggest moves. As you can see, the volume is big, right? But look at what it was before. This is the volume we had on Wednesday. So we had a very big volume, 170 million shares exchanged. But as you can see, this is very small compared to what it can be, okay? It can go to, you know, here in May, we had 700 million shares exchanged. In Jan, we had 400 million shares exchanged. And in May, it was for many days in a row. So what I'm saying is that, of course, this is good. Of course, this is very positive. But it's not yet, I think, the big moves we're gonna see. Those big moves, once again, usually occur in third waves. So, and a third wave occurs after a second wave. So for now, I didn't see the second wave. So maybe it's gonna be all different, you know, that's possible. I'm just checking the past and trying to, you know, imagine what it can be if the same, you know, structure is forming. And as you can see, even in any kind of squeeze we had in the past, there always was a second wave pullback. Do you see the second wave pullback here? Because, okay, we can try to, you know, to see. I don't know, here it's not a second wave pullback, we have only green candles, okay? So maybe this time is gonna be different, maybe. But most likely it's gonna be a little bit the same kind of structure. So we always have one or two red candles in any move up, okay, for the market to breathe. And for now we didn't have them. Once we're gonna have it, and then when we're gonna start to move higher again, then I think that, you know, the really big moves can happen. So once again, let's see. And as you guys know, you know, technical analysis is not anything that gives you very exact levels, exact timing. It is just something that you can use to try to anticipate what can be the market structure, where are the support levels, where are the resistance levels, you know, what the price action is giving us in terms of momentum, things like that, guys. So yeah, this is pretty much what you can expect here. Okay, do you think we'll head back to the May 25th gap of 10? Oh, no. I don't believe that. I don't believe that because the move we're having here is impulsive enough for the bullish momentum to be taken back. So once again, just the same way as when we had the breakout below 38, I was saying we need time, and I started to talk about April, May, June. I'm not sure I mentioned June, but probably I did if Ding Dong Dong is saying that. And for the reason why was because we had a major breakout with volume that was breaking, that was, you know, just changing the momentum. Here we have the same thing that happened on the way up, and this move up is gonna leave a memory in every bear's mind, and they're gonna be buyers at lower levels. They're gonna, you know, try to reduce their positions at levels that they're going to consider as good because they lost a lot of money in this move up. So this here once again is very impulsive. I was telling you guys last week that I wanted to see AMC moving in 5 waves up, that we didn't have it. We had it on GME, but we didn't have it on AMC. Now we have it on AMC. Clearly we're having a beautiful 5th wave that is forming right now, that once again I think is going to 26. Of course it can go higher, but 26 is a level that makes sense to me. Once again, I explain why, because we had volume trading across this level, and that this was the natural support and then resistance level in like a few months ago. Bam bam bam, yes, AMC, it's crazy, like up 18%, GME up 8%. So we are having the catch-up I was talking about, guys. So it's beautiful to see happening live. GME is a little bit stuck at this 165 level. Bears are here. Let's see if we have volume. If we have volume trading on GME, it's good news. It means that, you know, the selling orders are getting consumed and that bulls are working on it. All right, so we have volume, guys. We have volume. So, you know, this is just a consolidation, and you know, the market wants to push higher, but definitely bears are here. I don't know how many shares they have, but look at this volume exchanged. Okay, let's go on hourly, guys, because you can see that this volume is not only 15 minutes, bam, second biggest volume. And look, this candle is very small, right? Usually you have big volume whenever you have big candles, whenever you have big moves, because you go through a lot of levels and you accumulate. I mean, there are a lot of shares that have been exchanged on the way up or way down, here way up. But this situation is different. We have a big volume, second biggest volume on the hourly time frame, and the hour is not finished, guys. We have 4 minutes left, 4 more minutes. That is trading with a move that is not moving much. What is this telling us? This is telling us that that there is, you know, a wall of orders, like a ceiling, all right, that is created by selling orders, and that these orders are getting consumed, all right? So once again, we don't know how many of them there are, but once they're all gonna get consumed, then it can, you know, there is nothing that can stop the price action to move higher. I mean, maybe we have some bears around 170, but most likely they are all here. And it's pretty obvious today what is happening. You see there is a very strong buying power on both AMC and GME, but GME has reached the level where, I mean, it's the major bear camp that I was talking about last week. We are there. We are at the we are here on this bear camp. We are in the bear camp. So there is a huge fight right now between bulls and bears. Once again, if the battle is won, let's try to find other levels. Okay, we have 180. We could go bam, brutally to 180. It's possible. It's possible because I can see the pressure that is put by bulls here in this area is very, very strong. Why is it very, very strong? Because we are really, you know, in direct contact with this resistance non-stop, okay, and consuming those selling orders. So this is looking strong, and once again, I don't know how many orders there are, but at some point they're going to be consumed, and once they are, then it can just explode. All right, let's have a look at the rest. VIX is moving a little bit higher, +2, no. I have here +2 now. VIX is moving lower. No, okay, it's still up 2%, but it's moving lower during the day. It opened a little bit higher, but it's moving lower. Nasdaq still bullish, guys. Okay, so this is looking good. Look at the AMC, guys. Look at that. Going there. We're going to 25.9. Let's see if this resistance area is going to be well respected. Let's see what's going to happen. But this is absolutely massive. The catch-up is happening right now in front of our eyes, guys. So then the question is AMC going to pull back, or is GME going to break the ceiling of those selling orders? Good question. It's hard to say. Okay, HYMC still going good. Okay, GME update. Pam. Wedge, Victor, si. My bro from Natixis, where I was working. Happy to see you, brother. Okay, so what else can we see? Okay. So Bitcoin is still like close to these levels. Okay guys, so we can look at BBAG, TCAT. Okay, we're gonna keep an eye, of course, on what is happening on AMC and GME, guys. Okay, so we can have a look at the stocks that were doing good last week but that were a bit stuck. So we're talking about BBAG, we're talking about Mullen. So let's have a look at that. Okay, so okay, so a bit weak today, but I'm not surprised because, as you guys know, the flows that attracted in AMC and GME are actually you know, coming from the other meme stocks. Okay, and everybody is today, you know, focused on those two. HYMC is to me related to AMC. This is going together. But BBAG and, you know, Mullen, I haven't checked Mullen yet, but I'm pretty I'm guessing it's, you know, not moving much or even moving lower as well. So BBAG is just, you know, moving a little bit lower, still above this trend line that is acting as support, as you can see, for the past 6 trading days, so a little bit more than a week. So we can expect this support to hold, but once again, I don't know, we had a lot of fake signals here. I don't have any strong view on BBAG. I don't think the focus is here for now. The volumes were just, you know, we had one big volume day and then volume lower. So 280 is a level where, you know, something can be done because it's the lower band of the gap up we had here. It's the previous high that we had here. We had some, you know, support as well in Jan. So this level is, I think, a support level, but not very strong. So either we just, you know, fade like we used to before, or we find some bulls sitting here and we have the volume coming back. So it's not easy to trade, honestly, because I mean, the best trade to be done here is just to buy here with a stop loss below 250, something like that. But I would personally not get in because, once again, this is not where the flows are right now. So I don't think this is the best place to put your money. So yeah, I don't have a strong view here. I think that the interest is not here for now. Maybe if AMC and GME are pulling back, then BBAG can move up again. You know, we're gonna have some maybe profit taking on AMC, and then the flows would get back here. This is a scenario that could happen. So we will see, guys. We will see what's gonna happen. All right. Then TCAT, FICEL. Okay, I'm gonna have a look at that, guys. For now, I'm still keeping an eye on AMC and GME. It's very interesting to see, all right, what's gonna happen, because GME can also give us a leading information about AMC. if GME is breaking out strongly above this 165 level, as AMC is late once again compared to GME, even after this catch up we have today. Let's see what is the premium of those two. Okay, 12% guys, so you can see 11 even percent. So we definitely had a catch up today, but we've seen this spread at 5% last week. So I think that we still have 5-7% difference to tighten between AMC and GME spread. So we're gonna monitor that, but the scenario could be that AMC goes to 26 and that GME stays here. I think this is a good scenario for the day. That would make sense in terms of you know, things that come back to normal a little bit in the spread, and they would both be, you know, at the resistance levels, at the first resistance levels we have here. Okay, the only thing that is not looking so obvious to me is that GME major resistance is 160, 165, but AMC 1 is rather 32 guys. So can AMC go to 32 today? I don't know, maybe. Okay, it's beautiful guys. Bam bam bam. Okay, so I'm gonna have a look at TCAT, I'm gonna have a look at FISL. So how do you know if the pullback is over on GME and AMC? So first, I have no way to know for sure, but I will just try to use fibs, okay, to know when the pullback is over. So for now, we are still, you know, just moving higher. So there is no reason to think a pullback will happen for now. This is very strong, so we can keep moving higher as long as, you know, we have this moves that happen with higher momentum and higher volume. So this is the case for now. But once we know how high we're gonna go, we can use fibs. So let's say we go to 26, which is I think what is happening right now on AMC. Then the pullback will probably occur around 21, the 38.2%, which is the first support that we're having here. So the 22 support, I can get rid of it. It's not a strong support. So, you know, once again, if you see strong volumes happening on the way down, so of course for now, it's not at all what is happening. We're moving strongly higher, but at some point, you know, there's going to be a pause, I think. And then we need to see how big are the volumes on the way down. If they're happening on very low volume, if we move lower but with no volume, then usually the pullbacks are very shallow, okay? So when they are shallow, it can be usually the 38.2%, so 21. So I think that going to 26, you know, doing like that, maybe here trying a little bit more to push, then move a little bit lower. Okay, this is a possible scenario. All right, so sorry, up. Okay, let's say we are bullish. So once again, I think it can go faster, of course, but maybe mid-April, end of April is when this could happen. Okay, and it's interesting to see that the 100-day moving average is acting as resistance right now. So let's see. I don't think it's a strong resistance, so I don't think it's gonna hold very long. I think we're just gonna consume quickly the orders that are sitting here. I don't see it anymore if I do that. Oh, right, so I'm keeping an eye on that, and I'm gonna answer your question. So BBHG is done, then TCAT. Okay. Not very bullish because we had a strong volume and then the next day it just got sold and no one was here to buy that. No one was here to buy that pullback. So on TK80 we are not in a situation where the momentum is shifting. We are in a situation where bulls did an attempt to go through these levels. So the resistance level is 270. So bulls tried to go through this level, but as you can see, in one day they got, you know, brutally rejected. All right, and the next day they didn't do anything. They just waited here. So they didn't buy. So I'm not saying we're not gonna go back to it, but I'm just saying that this is not looking very bullish. Okay, I'm checking the past. In the past we've done that many times, consolidating here, and then we always had a downside breakout. So maybe things are gonna change now. Maybe now the breakouts are gonna happen on the upside. I don't know, but for now I don't see anything very different from what we had in December, what we had in Jan. So I'm waiting to see at least a close above this blue trend line. So I think that if we're able to close at 270 to 80, even 3, it would be better. Then something could happen. Let me add that in my watch list. I've been in the TK80 trade before. I used the stop loss. I got stopped on this. So I don't have a good memory, you know. So whenever I don't have a good memory about a stock, I usually need really to see some strong signals to get back at it. Okay. We're gonna then check the opportunities we can have today, guys. Once again, as you know, I'm keeping a track of everything that looks interesting to me. So I'm adding TCAT, which doesn't mean that I will get into it, but I will keep an eye on it. So we said 280, all right? Sorry. Okay. So this is gonna give us an alert whenever TCAT reaches 280. All right, FICEL. We know already, so I didn't check FICEL today, but FICEL is in the list. We are monitoring it. And the level, look at that, guys. Amazing. AMC going through this 100-day moving average. Not very surprised, it's not a strong resistance. Let's see what's gonna happen around 26. I think this is where we're gonna have a fight, the next fight. Okay. HYMC is doing good as well. All right, so FICEL. Okay, so it's good. I like to see that. I mean, sometimes I know you guys prefer to see strong moves up. All right, you prefer to see a massive rally with a big volume, and then everybody's getting interest, and you know, and some investors just consider this as a good trading signal. I don't. What I consider as a good trading signal is whenever I have exactly what is happening right now with FICEL. So whenever I have a clear resistance line that is created at the beginning by only 2 levels, 2 points, okay? So 1, 2. And as you can see here, I have adjusted my trend line, because if I really use the highs, I'm gonna be here, all right? But then, as you can see, we have here a consolidation that is forming. The consolidation is forming whenever we have multiple reactions in a short period of time on a level, and it's forming around the 200-day moving average and around this 690 resistance level. So then I have my trend line that is here coming you know, from the highs, that is not coming on this consolidation, so I adjust it, all right? And here I miss this, okay, but I don't care, because what is important is the recent past. I know that this is where the battle is happening, okay, and I want to know who is going to win this battle, so that is going to give me a direction. And the reason why I like to have this consolidation lasting long is that it's making clear where the bears are, and here it's now very clear that they are located around the 690 level. So this is happening on low volume. It's good if you have high volume in this consolidation periods, then it's just creating usually noise. You have big candles and you don't see clearly. We like to see really small moves, small volume. Bam, AMC at woohoo 25, guys. So okay, it's catching up. I told you guys this premium between AMC and GME is not gonna last long. It's gonna regularize soon, and it is. All right, right now we have okay 9% spread only, so we can assume the spread. Once again, last week we saw 6. We can assume the spread to be at 8%, to be at 5%, something like that. Then things are gonna stabilize, I believe. Okay, and like I said, once again, look what I used to build the spread. I used 130.21. Okay, I used those two levels. I used 130 on GME is equivalent to 21 on AMC. So we can expect, guys, that, let's see, it's not done yet. For now we're pushing higher, but the scenario that is starting to be built is that this first wave will go to 226, and then maybe the pullback will start happening. For now, I know it seems maybe not intuitive to talk about pullbacks because we are pushing higher, but I'm already trying to anticipate where we can have this, because I want to know where this, which level we could reach after pullback, because this is where it's gonna be kind of easier to trade. Okay, AMC at 25. Okay, so let's go back to FICEL, and so here we're gonna monitor this breakout. So once again, either if we have the breakout during the day, then it's good to enter at the close, but it's a little bit risky because you didn't have the big volume that you're usually trading at the close, that is sometimes completely changing the price action levels. But if you wait the next day for the open, let's say we have a move of FICEL that is closing at 7 and you don't buy before the close, the next day sometimes the pre-market is going to be at 7:20, 7:30, right? Because everybody is going to be okay, we have the breakout, let's buy. So that's why the best thing is to trade before the close, but you need to be careful that the breakout really occurs whenever you get your shares. Okay, bam, guys, look at that. AMC 25.3, it's just unstoppable. Okay, how high can it go? I think 26 is the next level. We're gonna see a fight happening, so we're gonna see that live, guys, together. We're gonna see if it's coming. I think I need to stay on this chart. It's gonna happen now, guys. Massive move up of AMC. GME is following. All right, so we're gonna keep an eye on that, of course. Okay, so this sell is done. What do you think when AMC hits the target of fifth wave? Are you talking about the short term or long term? About short term, I think that whenever the fifth wave is hit, we're gonna have, you know, a consolidation first happening just below. So a first rejection, then come back to it, you know, and here consolidate just a little bit like we've done here. We might see some first short-term reversal indicators that are gonna start to appear once again with lower volume, momentum starting to shift down, things like that. For now, we don't have it. I don't think we can have a rejection just that happens right away. Once again, after some strong moves like that, the market always need to digest what is happening, and it's very likely gonna, you know, just stay around this resistance line. Okay, just like GME is doing with the 160, 165 level. It's just, as you can see, hovering around this level. Even if it's trading high volume, the price action is just staying there. So no, I don't think we can see a strong rejection. I think that even today we cannot really, if we go to 26, I don't think we can really close much below than that, because the bulls are putting a very strong pressure, and it's gonna take maybe 1 or 2 days to slow, and we're gonna have some signals that are gonna start to appear that are gonna tell us that the momentum is slowly shifting towards bears. For now, it's not the case at all. Volume is big, the moves are strong. So let's see what's gonna happen here. HYMC, of course, is moving higher. Okay, so AMC touched 25.73. It's getting rejected little bit the first time. I think we're gonna get back at it soon. Let's see. You know, the usual process of whenever the price action comes to resistance is that it's testing it multiple times on the short time frame. So that's why I zoomed in. I'm right now on a 15 minutes time frame. I can even go on a 5 minutes time frame if you want to have, you know, a closer look at what is happening around this level. Bam, a lot of volume trading here. So you can see here AMC took a lot of volume. It's the biggest 5 minutes volume that was trading almost during the week. So bulls are intensifying their buying orders. So for this reason, once again, I think that they are still located everywhere here, buying pullbacks. Okay. So we're gonna probably go there again at 25, 26. So let's see. Okay. So oil market, once again, where is it? Yeah, I wanted to discuss as well quickly that I'm not sure you guys are very interested in what is happening in Japan, but it's pretty interesting to see the USD GPY that is absolutely like ripping for the past week. And the reason behind is that the policy used by the Bank of Japan, which is the equivalent of the Fed, is very aggressive. Basically, those guys, they are, you know, buying the 10 years yields. They are buying, I mean, the bonds to tackle inflation. I mean, they don't have the same inflation issues, but their monetary easing is, you know, very strong, because they go even to the next level by buying those bonds. Whereas, for example, in the US, if the Fed wants to have an impact on the long-term yields, which is ultimately having an impact on the inflation, they only move the short-term rates, right? In Japan, they go directly on the market and they buy yields, they buy bonds. So this, of course, is sending a very strong signal to the market that we have a divergence in the monetary policy between Japan and the United States, and that the Japan is going to keep, you know, injecting money in the economy, because once again, when the Bank of Japan is buying, they're buying with money that is created. All right, so this is the reason why the JPY just gets hammered and the USD JPY is going to the sky. So we are coming close to the 125 level, which is the first resistance level on the USD JPY. But given what is happening, my take is that we revisit the highs that we saw in 2000, so around 135. Okay, so for those who are interested a bit about the Japanese yen, I know some of you are not interested in that at all, so I'm going to be quick. But we might have a first rejection around the 125 level, then go through it, retest, and then go to 135 by, you know, next year. So I think that this rally is once again not just a random move up, is the beginning of a long-term move. And as you can see, you know, we have one move up, one move, then a strong correction. And I think we're gonna see things on every market that we haven't seen for quite some time. Bam, 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 look at that, guys. AMC came back at it right away, up 27%. That's no joke. That's very, very strong. So now we have touched 25.99. We are right now at 26. So let's see what's going to happen. Let's see if this is indeed a resistance area or not. That's, I showed you guys how we found this morning. So we're going to monitor that. Right now we're staying here on AMC chart, 5 minutes time frame. We can even go, guys, if we want to, you know, be really close to the action, we can go in the 1 minute time frame. And look, guys, a lot of volume trading, but the price action not moving a lot. So this is, ooh la 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 la, we're going through it. Are we able, if we go through it right now, and we are, this is, guys, okay. Are we able to go, can we go to 32 today? Okay, let's see. This is maybe just, it's I'm on a 1 minute time frame, so of course it's very volatile. And for now, we need to hold a little bit longer than that, above 26, to consider that bears have been defeated. Maybe here, you know, they're hesitating, but they're gonna, you know, sell more shares. I don't know. AMC up 30%, guys. That's very, very, very serious. And guys, this is, I mean, I'm trying to see what information we can get from that. Okay, biggest 5 minutes volume ever. So this is once again showing you guys that it's just bulls are extremely, extremely strong, because this 26 levels gave us, I mean, we stayed 10 minutes below that. We got rejected once. It was at 25.73. We didn't even pull back, and then we went right through it. So of course, a 5 minutes time frame is not a time frame that can be used for breakout. So I'm not sure this signal is valid or not yet, but just like we did with 22 this morning, where was it? It was here. We went through it, we retested, and then we moved strongly higher. So this is very possible that we go through 26, we just retested quickly, and we go right away to 132. GME is coming close, guys, to this 172 level. It's breaking, guys. It's breaking out above the 160 level. I mean, so what information can we get here? The 200-day moving average is being crossed. Okay, for now we don't have the information on the daily volume, which is of course going to be important, but we already have a very good idea that the volume trading today is going to be one of the biggest we've seen, probably bigger than even the one we had on Wednesday. Let's see. But as you can see, we started the day with a very strong volume, slightly lower than the volume we had on Wednesday, but the next volume bar is bigger than the first one we had at the open today. So the sum of those two is almost equal to what we had on Wednesday, and this one that is right now trading is also is going to be huge, guys. It's going to be huge. So we are looking, of course, very, very good, guys. Okay, so bears still fighting, guys. Now we're gonna see live, okay, who can win this battle. But for now we have some rejection, but once again it's not for now we don't have a very good information, because we got rejected slightly below. We ran through it. We don't know if we are retesting it, if we are getting a little bit rejected. I think we're gonna stay around this level for a little bit of time. Okay. Triple Q fading. I'm keeping an eye on the rest of the market. It's a very isolated move that we're having right now on AMC and GME. The rest of the market is not, doing anything crazy. We've seen, so Bitcoin broke out yesterday above 46,000, Wednesday above 43. Today is very stable. Strong but stable. We don't have big volume. I'm checking a little bit what else is hot, and nothing else is hot, guys. We only have AMC and GME that are extremely hot. This is where the flows are going today. Can we go to 32, guys? Can we do that today? That would be really, really nice. Okay. We are a little bit consolidating around this 26 level for now, which is totally normal. We had a lot of volume trading here. The biggest 5 minutes volume was trading today, traded right now around 26. Okay, we have the biggest volume since even the 23rd of March, guys. Today is going to be a historical volume trading, probably bigger than the one we had in August, and let's see if we can get close to the volumes we had in May. But definitely this is nice, guys. Okay. Bam, bam, bam. Look at this RSI at 87 and bulls keeping pushing. That's nice. Okay, guys, look at that, the negative beta. I told you again that this is one of the signs that we want to see, is the market, trading negative, a little bit, and GME and AMC going higher, because this is the environment we were in when we had those massive moves up happening, you know, back in May, back in Jan. And today we have SPY down 30 bips, triple Q that opened the day quite good, but that is as well moving a little bit lower. We have AMC up 30%, GME up 14% right now. GME going through its major resistance level, guys. So we still need to stay cautious, but guys, this is looking very good. Okay. Pam, pam, pam. I'm staying, guys, here on this chart because I really want to see as close as I can what is happening around this 26 level. Definitely a huge fight. A lot of volatility. As you can see, it's not exactly 26. It's like we went up to 26.5 almost. We are now, you know, a little bit rejected, but definitely, guys, there are a lot of buyers here. Okay, we are not even coming to the 20 period moving average on the 5 minutes time frame, so this is showing you how strong this move is. Okay, getting a little bit rejected right now, but once again, I'm not really worried. Probably it's gonna be bought quickly. But at least what is very good today, guys, it's too early, of course, to you know, make some scenario with price targets for the very long, I mean, for this potential squeeze that is happening right now. But what we can already say, and those are facts, okay, and then we're gonna see how we can use those facts to predict, you know, as good as we can what can happen next, is that we had the most impulsive move we've seen since May. Okay, that's a fact. This move took back some major levels that told us already last week that the correction looks like is over. We wanted to see, for this bullish momentum to really be strong, we wanted to see 5 waves. Okay, and this morning we didn't have it yet. And I was telling you that even if we have lower volume, lower volatility, and lower momentum, it is totally acceptable because the market was making lower highs, okay, just like here. Then we went through this level. It didn't give any opportunity to, you know, to increase the position with a pullback. This move is very strong, but it's very often happening like that. It's very hard to get in those strong moves whenever they start. It's better to, you know, use a consolidation area that is more calm, where, you know, it's easier to trade, to build up some positions. So right now we had this 5th wave up. So what we can say, and this is a fact, is that we had an impulsive move with the biggest volume we've seen in almost a year, with the biggest volatility we've seen in almost a year, that took back some major levels and that developed in 5 waves. So this is what I call the first wave. So once again, I don't know if the first wave is complete or not. Maybe we're gonna go to 32 today. 25 was a target we discussed this morning. I was having 25.5, then I adjusted it to 26 by looking at the previous highs and lows that we had before. I don't know if those who are watching right now were here at the time, but the way we found 26 is that we checked here the big volume that traded through the previous resistance or support lines. I'm not going to do that again, but when we did that analysis this morning, we saw that 26, just because of this day with a huge volume and this resistance, this support, and this resistance, was the level that could give us, you know, a target, a reasonable target. I like to say reasonable target when we talk about 30% move up, but I mean, there is no big surprise. I mean, of course, it's always a bit surprising, but a 30% move up that is happening after those strong moves we saw last week is not something that is really unexpected, that is really surprising, both bulls or bears. So for me, for now, we're having a kind of, I would say, well-structured price action that reached the 26 target. So right now, maybe we're gonna push higher. Once again, fibs are only giving areas, and 26 was not inside those levels. Okay, we had 34. Sorry, I'm not at the bottom of the force. Okay, we had 24, 27, and 33. Okay, so it's hard to say this fifth wave which level it can go to, and we've seen that 26 is the first natural resistance. Okay, so we said that maybe this is going to be the end of the first wave. If this is the case, because right now we are having a very impulsive move that is telling us, once again, whenever we have this kind of moves, the market remembers it, and it's very likely that after pullback, consolidation, small correction, we have a third wave that should be stronger than this first wave. Okay, because third waves are when really big money players are getting in massively. For now, we have some early players that put big money already, but it's not, once again, the big volumes we've seen in the past. Because whenever we check what happened in May here, I mean, look at those volumes, guys. We feel like the volumes are strong, right? But we need to keep in mind that this is only, I don't know, 20% of what AMC can do. Okay, so we have still a lot of players that are waiting, that didn't get in the trade. Okay, whenever the volumes are big, of course there are a lot of buy and sell trades that are done in the same day. But there are also a lot of buyers that just accumulate shares. And of course, this is what we need for the price action to really move strongly higher. So for now, the volumes are big, but it can be much bigger. So what I'm saying is just that, once again, not sure this first wave is complete or not. 26 has been reached. We discussed this morning. Let's make two scenarios. We're gonna make a scenario where this first wave is complete, and we're gonna try to know where the pullbacks can happen, because now everybody's doing that. Okay, everybody's wondering, where can I buy some AMC shares? And the first level that comes is 38.2%, which is I would say the most common level for second waves. It's a shallow level, so for the 38.2% level to be reached and nothing beyond, we want to see low volume during this pullback. Now, can the pullback, what kind of shape can this pullback take? We can check at the past. Okay, we can check at the past, and we can see that before, second waves last 1, 2, 3, 4 days. Okay, for May we had 4 days to get in some shares before it was too late. I think the same situation is about to happen. I think we're gonna have right now a window of a couple of days that is not starting today, that is gonna start whenever we're gonna have the first real rejection. For now, this is not a rejection, this is just, I mean, it's a rejection in the 5 minutes time frame. It's not a daily time frame rejection. Whenever we're gonna see that, then we have probably a window of between 2 and 4 days. Here it was 3, and here it was 2. Okay, so between 2 and 4 days, where it's gonna look like AMC is rejected. Actually, it's just going to be, I think, a little pause before the real move up. Once again, it can also fade on the downside. We need to be prepared for everything, but I think it's a risk that is worth taking. And if we go higher, of course, this level would be higher, but the same thing can be done. Now let's check. We have only two situations where we can compare. We can check quickly what happened in November, but let's be honest, you can see, guys, that what is happening right now is very different from what happened in November because of the massive volume and massive moves. Bam, bam, bam. In November, even here, we moved strongly higher. We had one day, okay, one big pullback day. And how much retracement was it? Oh, we can check what was the Fib ratio that was hit during this second wave pullback. So it's hard to say if the first wave starts here or here. I would start it here because this is one move. Okay, so you see in May, the second wave pullback went to the between 38.2 and 50% of the first move up. If I take a larger move up, it's still 38.2%. So for now, it would be around 21 on AMC. So I know it might seem maybe bearish, but it's not bearish, it's bullish. Okay, if we have a pullback to the 21 area in the next couple days, to me, it is just giving us the energy we need for the players that are waiting below. Because if we keep moving higher, some buyers, they will just not get in the trade because they are waiting for an opportunity to get in lower. If we go lower, we can get those buyers in the trade. And of course, we need them. We need everybody in the trade for those strong volume to happen through the major resistance levels. Because as you see, whenever we arrive at a resistance, we have a fight. And we need volume because we need to consume all the selling orders. And to have volume, we need everybody that bought in the past to buy again, okay? So let's see, for now we're getting a little bit rejected from the 26 level, which is, let's be honest, not very surprising, but we don't want to get rejected too hard, okay? For this day to be a good day, it is already a good day, but to be the perfect day, let's be honest, it would be even better we go to 32 and consolidate then around 25. But going to 26 is maybe even better because we would be able to buy shares at a better price next week or this week. Let's see when. Yeah, so I want you to check that. So here we went to 38.2%. The second wave went there last week. Last May, not last week. We have another one that we can check. I don't know if it's really comparable, okay, because it was the first time it happened. And we only moved by 25% higher before pulling back. And this pullback went to the 50% retracement, Fib retracement. Okay, 1, 2, 3, 4, 5. Okay. I'm just trying to check all the pullbacks that happened on AMC before strong moves up. Okay, here we have an interesting area. Even here, you see, even here. So I measured the move from 2 to 3. So we have a 60% move up. So roughly similar to what we're having right now. And I measure that and I check fibs and I see that even in this move, we retraced to the 38.2% retracement level exactly before the massive first squeeze we had in Jan 21, okay? So, of course, things can be different this time, but I think that we're gonna see this 38.2 level again. So 21.2 if the high of the first wave has been hit today. Okay, let's check GME. Let's do the same thing. And let's see, GME is ahead again, okay? Guys, the problem with this breakout, but we're talking about stocks that, are which behavior is very different from the usual stocks, okay? We know that. But So this breakout is good to have. I mean the breakout above the 160 level and above the 200-day moving average. But I would like to have more consolidation before that is showing me that we had this period of balance between bulls and bears that gives energy to the price action, and that allows you know, a lot of players to get in the trade. Here things go very fast, which is good as well. Okay, I will measure things. I'm just checking, you know, it's possible as well that I'm wondering, can we just squeeze right away? You know, it's because we have some little consolidations. Okay. So we can check at the past. It's the best we can do. Bam. So, okay guys, and yes, hit that like button. Thank you, bro. Give me some love, guys. I'm gonna stay here with you, updating you with what I'm seeing live on AMC GME. Of course, those two stocks, as you know, they are very unique, and you know, going through the price action of those stocks is, you know, tricky. There are a lot of traps, but we have already, you know, some data that we can use to make some assumptions about how the players that are involved in this trade are acting. And I wanted to check second wave pullbacks, okay, on AMC and GME, because this is what we're waiting for. We're waiting for the second wave pullback to get in and buy more shares. I think that many traders are doing that right now, and so we need to be slightly ahead of them, and we also need to be not sure, because you can never be sure, but to have good reasons to think that the pullback we could see, that is not happening yet, is not looking like a strong rejection, okay? Because if yes, then it can be more, I mean deeper than the 38.2%. But first, let's have a look at GME and take the last moves up, okay? And bam, here I have a one. Okay, so you see here we went to the 50% retracement back in September 20. You see, even in this strong move up, there's always, you know, some, you know, candles, red candles here. Okay, this for example is extremely shallow, but this, guys, I remind you, this was the first squeeze. Nobody was ready to see that. No one knew how to handle the situations. Every trader was just shocked by what was happening. So I think that right now things would not happen exactly like that. But let's check even in here, and the situation is very different, because as you can see, here we were in an environment where, so this was back in 2020, Jan 21, we're in an environment where we were moving higher, and you know, the market was breathing each time. Here it took a breath, here it took a breath. Okay, so this is not a second wave pullback, but I can still measure that 50%. Okay, the market was breathing, and then suddenly started to really move, to accelerate. And even in this acceleration, we saw the 38.2 level. No, it was not reached. Okay, so here between 23.6 and 38.2. So I'm just trying to find the levels that we can use not to miss this move. Okay. Okay. We can very well I'm wondering what would happen if we go right away to 250, because right now we are above the 160, 165 level. We didn't get rejected here. We were having a weaker momentum at the end of last week. This is not the case anymore. So, bam. Okay, on the hourly time frame, we still have those bearish divergences that are drawing. Okay. We have mixed signals. Let's be honest, this price action is very hard to analyze. I'm having mixed signals because I'm having a wedge upper band breakout above 160. I'm having a breakout on the daily time frame above 160, 165. But on the hourly time frame, I can see the momentum is a little bit fading, but on higher volume. So most of information I have is of course very bullish. And I'm just trying to know if we are, I mean, if this first move up is complete or not, and if this market needs to breathe to go higher, or can it do it right away? And for now, I see we have energy, guys. I see we have energy. Sorry, this is an AMC. Let's see what we can do today, but a move okay, up. Let's use the regular scale. Hmm. 150, 160 is all. I mean, I don't think we can really go below that right now. I was talking about 130 this morning. Right now, I think that 130 is a bit too far. Okay. Okay. Maybe we go to 180. 180 is the breakout level we had in December 21. It's a level where we had, I'm trying to find the target for this first wave, okay? And of course it can go to 180, 250, 165 I was saying this morning, but now this is broken and with increasing volume. So it doesn't look like the end of the first move up for now. It's not looking like that. AMC is pulling back a little bit, but this is still strong. And yeah, 180. Once again, let's analyze a little bit what can happen. Okay, so this is the breakout level we had back in December 21. Bam, bam, bam. Is it higher? Yeah, 181. Here we had a big volume trailing, but it was higher, so the volume is not helping us much here to find the next resistance level. Okay, it's very wild, guys. It's not easy. I don't know. I mean, you know, I always try to give you some levels where potentially we might find some, you know, sellers or buyers. On AMC, I gave you 26. It seems that indeed we had some sellers located there. Right now we are correcting a little bit, but on GME I gave you 160, 165. We went through it strongly today. Right now I don't see clearly. I have the next resistance at 180 and then 250. Okay, that's all I can say. For me, we didn't pull back at all here, so I'm expecting at some point a pullback to happen, but the pullback will not happen if bulls are so strong. So for now, we are more likely to push higher than pull back. Okay, this is what I'm seeing. Cool, brother. I hope to see that you enjoy that, guys. Okay. Okay. Thank you very much, guys. I'm happy to see that you learn things. This is what I'm trying to do with you. Once again, I'm not picking the easiest stocks, guys, to analyze, but you know, you decide what you want to see, right? You want to see AMC GME. I want to give you, you know, the best content on the stocks you like. So I'm trying to use the methods I've been using for years on those two stocks. It's of course very challenging. The situation is different, but you have some techniques that work exactly the same. Okay, everything that is involving volume, you know, volume is just an indicator that you know, can be used everywhere, and the resistance support areas as well, fibs as well. I think they're giving me good information. The difference between what I'm used to do, which is basically trading stocks that are, I mean, respecting better the price action kind of rules, all right, with the pullbacks and everything. I mostly trade big caps. You know, when I was working in banking, I was mostly even trading futures, to be very you know, clear. And so yeah, this is a different game, but we can see that a lot of methods still apply to the stocks. And right now, for example, 26 has been acting as resistance. So let's see what can happen from here. Okay, I'm keeping an eye on everything else, guys. We have Nasdaq that just came back to flattish. SPY a little bit lower. AMC back to 25. I think we're gonna, you know, just go back to 26, oscillate between 25 and 26. Okay, I have some questions about options. So options, guys, we keep an eye on that, of course. So options look bullish, guys. So let me go back to AMC. But I don't know if you remember, but for some of those who watched my videos for some time, to me, we still have a lot of room, guys. So we have room on the volume. We still have the situation about the global market that is not clear to me. It's not a perfect bullish environment. And regarding the option market, so the regular short is very, very stable, guys, for the past year, always between, you know, 18 and 20%, as you can see here. So here I'm only having data since August 21, but you can see the regular short is actually increasing, guys. Okay, so shorts are adding, and it's funny because they're adding on the way down. All right, fair enough. What I'm seeing very different compared to what we had back in time, back in May, back in Jan, is the maximum synthetic short. So the maximum synthetic short is created by out of the money options that I bought mostly by retail investors. Okay, those very high strike that I think, guys, is not good to buy. Of course, if there is a massive squeeze, you're gonna make money with it, but you can make money with lower strikes like 40. 30 seems a bit low right now with AMC at 25, but 30, 40, 50 strikes, you can make as much money if we go to 100 and 150 than the 100 strike. And most likely, if we go only to, I don't know, 50, 60, which is possible, which is a very nice price for AMC, but not close to the squeeze targets, the lower strike will allow you to lock in some nice profits, whereas the very out of the money options will expire worthless. So that's the reason why I believe that it's better to go to lower strikes. Okay, even if you have a little bit less leverage, it's still better. But I'm monitoring, of course, what is happening on those very out of the money strikes, like the 145 strike. And I don't know if you guys remember, we had 20 million shares before on this strike. And then, you know, the expiry occurred. It was the Jan 22 expiry. and then I was telling you guys we need to monitor whenever this strike is going to get rolled and whenever buyers are going to get back to it, because this is a good indicator of a very strong bullish sentiment. And right now it was at 5 million a couple of months ago, a couple of weeks. Right now it's at 8 million, so it is growing. But if I take the sum of all those options, okay, I have 78 million equivalent shares, which is representing 15% of the market capitalization. Okay. Back in time, we had, as you can see here, which is this value that I'm monitoring, that is right now at 15%. Back before, we had up to 22%. So what this is telling me is that we're looking good, but we can look better. All right, and this is the reason why I think that if we have a second wave pullback, maybe next week, I hope we're gonna have it, because this is gonna be a nice opportunity. Maybe we won't have it. Okay, we need to be prepared for everything. If we have it, call options are gonna be cheaper, and I think that there's gonna be a lot of them that are gonna trade, and we're gonna see if from 15% of, you know, maximum synthetic short, we can go to 20, 18, 20 to get these levels. Bam. Here, as you guys know, I'm monitoring this, the DTC. So look at that. This was the DTC when we squeezed around 3.5. Then it dropped heavily with the price action, and now the price action was here moving sideways, but the DTC was building again. We are still not close to 3.5, but we are right now at 2.9 today. It's the biggest one we've seen since AMC started to drop some time ago. So this is very good news. I want to see this keep going higher. So we're gonna of course monitor that. Okay, let me refresh the information, because as you can see, the DTC is growing with the price action, because the synthetic short is growing because we have gamma. Okay, so bam, I'm going to use this information instead of that one. Okay, bam. Okay, DTC 2.95 guys today, so we are getting close to hot levels. Okay, so I'm not sure exactly what other information I can give you regarding this option market. Just I can tell you that it's a very animated option market, very strong, but it's not looking like it was back in the days when we almost squeezed and at least did those very strong move up and new highs. So for now we are not, I think, ready for that. But once again, if my scenario, which is a second wave pullback close to the 21, 22 level this week or next week, probably which is gonna give us a window of a couple of days, I think, where maybe things are gonna be looking like, oh, bears are taking back control. No, probably not. Okay, we're gonna need to check the volume. Once again, if we have a big red day that is trading more than the green days we had, okay, then we're gonna be careful. But if we have a very small volume day, trading even with AMC losing 5-8%, it's really not a big deal, and probably it's not going to close the day low. We need to see those moves happening intraday. It's even stronger, but we're not there yet. For now, we are still very bullish. We got rejected at 26, but I think we're going to stay close to this level today. So let's see, let's monitor that. Okay, do you think the top of the fifth wave can trigger the squeeze? I think that the squeeze can be triggered in the third wave. Okay, in the third wave, where we're gonna see those massive moves happening with high volume. Okay, so once again, guys, I'm just giving you here rough estimations, but if I look at that, okay, let's say the first wave is complete. Okay, the second wave can happen here, 6th of April, maybe next week. Okay, I'm trying to see how steep this can be. If it squeezes, it's gonna be very steep, huh? We know that, guys. So yeah, end of April, I think that end of April is a reasonable target, so I will personally go to options that are probably June options, you know, that seem pretty fair. Maybe it's not gonna happen like that. Maybe, you know, bears are gonna get the best of it, maybe, but maybe not. And it's a risk that to me is very worth taking in terms of potential rewards. So here, building a massive, you know, position using call options in the second wave pullback, you know, every day a little bit more. We're probably gonna have a 3-4 days window. Every day the volatility is gonna be a little bit cheaper. Every day the theta, which is the decay with time, is gonna be passing. So options are gonna be cheaper, and accumulating some options like that, I think is a very good strategy, because the good thing about options is that you know how much you invest in them. Not financial advice once again, but the loss is limited. Okay, whenever you buy shares, you never know, you know, what's the maximum loss you can have. But buying options whenever we move like that, I don't think is good, because first, usually we see those levels a couple of days, weeks after, with a lower volatility and with time that has passed. So basically, option prices between, for example, I don't know, last week when we were trading around 20, 21, if we trade again at 21 in 1 week, the difference between the price of June options strikes, I don't know, 50 is usually, you know, 50%. So I don't know if this happened to you guys. Sometimes you buy some options, nothing much happens, and you lose half of your investment. This is exactly the risk here to buy options. But if you buy options during a second wave pullback, you're actually getting in when usually you lose 50% if you bought it at the wrong time. So this is the trick with options. Once again, I've been trading options for 7 years, so I know this trick. And yeah, there is of course no guarantee about anything, but second wave pullbacks is the right time to buy options. Whatever you do, whatever you trade, whatever, you know, asset, buying it during a first wave is usually not a good idea. Once again, because of the time that plays against you, because when the second wave pullback happens, you know, time is passing, and it can last 1-2 weeks. Sometimes it can seem very long. So especially if you went to very short maturities options, then sometimes it's just expire worthless. And even if the scenario you think could happen is happening, but just a little bit too late. So what I learned from options is that it's better to always take a strike that is a little bit lower than you know, basically half of the target you have. So if you have a target here, I don't know, at 150, options that are around 70 strike is perfect to play this target with a maturity that is, you know, a few months later than when you think it's gonna happen. All right, this is I think a good advice that I can give. Always extend a little bit the maturity, lower a little bit the strike, because it's gonna work better in the long run. Okay. Do you think the top of the fifth wave can trigger the squeeze? So like I said, I think the squeeze can be triggered. The top of the fifth wave. Which fifth wave? The big one? You mean the one that could go to 135, which is my target? I think that, so let's imagine this scenario. We pull back next week or this week. A lot of buyers get in. We had a massive move up close to the 60-70 area. We revisit the highs. Then we're probably gonna have a rejection because it would be the all-time high. And then this potential fifth wave that we're waiting for almost a year, guys, could happen at that time. And okay, what could happen here is, let's be honest, unpredictable, because this would be something that the usual market players do not, I think, take into account. I personally think this is a very reasonable scenario. I don't think this is crazy. But I think that if it happens, maybe for some players it would be crazy. So maybe they wouldn't have anticipated some margin calls, some loss if they are shorts, or maybe some investors are just going to be attracted to the trade, and we're going to have the biggest volume ever trading on AMC. It's possible, but I can't absolutely give you good information about that, because I of course have no clue about what would happen in this new situation. But my take is that most players anticipate a little bit what is happening, know what are the risks, and they're not going to be surprised if we go to the 100 level. Now if we go to 135, 100 and maybe 50, then I think we would reach some levels that no one expects can be reached, and then things very crazy can happen, very crazy. And of course I have no clue about what exactly, but what I think is that we've seen, guys, this market is manipulated, and we had some examples about nickel that I gave you guys, that squeeze. There was a massive short squeeze on nickel last week, and we've seen the LME exchange, which is the future exchange based in London, cancelling trades that were executed and making a halt. A halt is a classic thing. We know that a halt will happen if AMC is squeezing, but how would you feel if they cancel some trades that got executed? You would not feel good, right? But you couldn't do anything. So this type of things can happen, all right? So I think that if there is blood on the walls, like we say, that some big money players get bankrupt, I think that the exchange is gonna intervene and save some of them to avoid a systemic risk, because if some players fall, it can trigger a domino effect that make other big players fall, some default in payments, and ultimately some risk for banks and for the economy. And the exchanges are of course gonna do whatever they can to avoid that. And I think that if AMC squeezes, like reach the 100 to 100 levels, this kind of things could happen. So I think it's going to be very hard to trade, and I think there's going to be a lot of bad things that are going to happen, and that retail investors are not going to be the ones that are going to be protected. I think that the big money players are going to get protected as usual, guys. So be prepared for that. Once again, I think that at some point you need to take profit. I know that apes don't sell, fair enough. I'm just saying that if we go to those crazy levels, we're not going to stay there long. Maybe a few minutes, maybe one day, I don't know. But then things are going to get back to normal, and the price action is going to get rejected. So the best thing, it's too early to do that, but is to place some orders everywhere on the way up, starting at 100 and going up to 900, I don't know. Even if it's very unlikely that we reach those levels, maybe if there is some trades that are done there because some buyers need to buy and there is no more seller, if you have an order at 900, maybe you're gonna get executed. But this is what happened on nickel once again, and they canceled the trades. So what can I say? Okay, it's very hard to trade, very hard to predict. The best thing is to hope that the players that fall, so hedge funds, are not putting at risk the entire economy. If they do, they're going to get protected. Okay, guys. So I think I'm done for today. I hope you enjoyed this live, guys. I will do the same thing again tomorrow. We're gonna monitor what is gonna happen here. So for now, let me just conclude on what is happening on AMC. So AMC moved in 5 waves with very big volume, big moves, close to the 26 target. Is getting a little bit rejected right now, but nothing very problematic. We expect the second wave pullback to happen in the coming days, coming weeks. Let's see. The first wave is not complete. We don't have the signals that the first wave is complete yet. But usually when we have the signals, it's already a bit late. For now, as you can see, the volume is increasing. The momentum is decreasing, but with increasing volume. You guys know that we don't like to see bearish divergences, but if we have a bearish divergence with increasing volume, it's fine. It's not a bearish signal. I mean, it's not a strong bearish signal. So for now, I don't have any reason to believe the first wave is complete unless that in terms of ratios and resistance, we developed in a classic five wave structure. So maybe we're gonna have a second wave pullback that is coming soon. Maybe it's gonna come later. We're gonna see. We can expect 21 to be reached for the second wave pullback. And if it happens with low volume, and if it's not staying close to 21 too long, we can expect a massive third wave to develop, taking back the real resistance level that is to me at 32 on AMC. And on GME, guys, we are in a very interesting situation because we broke out below 160. So maybe this can trigger some massive moves right away. I don't know. We're looking very good. Same thing, we developed in 5 waves on the upside. The 5th wave might be not complete. We can go to 180, that is the next resistance, or 250, that is the one even before. Whatever happens, we would at some point have a pullback. So it can be much higher. If we go to 250, the pullback will probably be around 185. If we don't make a new high and we start to correct right now, the pullback would probably be around the 140 level. So we're going to monitor all of that. And then same thing, we can expect a strong third wave to develop after the second wave pullback. So that's it for today, guys. I hope you enjoyed this video, and if you did, please don't forget to click on this like button, guys. Give me some love, and I hope you enjoyed that once again, and I'm seeing you tomorrow. See you guys.